Checkout tracking by the NPD Group brings you a receipt collecting system that gathers data anonymously through technology we created, providing your businesses with answers.
Right, I'm from IPC Ventures, and I'm one of the, basically I'm a managing partner of the firm, and we have 4 offices based in Dublin. I'm based in San Francisco, and then Tokyo, and also Singapore. So I'll cover briefly in the slides about our firm, but essentially we are early stage mobile first investment companies, basically trying to work with a lot of talents around the world. I wouldn't say we're financial per se. I come from pretty extensive entrepreneurship and operational background myself, plus also finance. So what we like to do is bring our experience to help some of the early stage startups, plus especially in the mobile space, mobile gaming space, because traditionally the business is not very favorable for the investors. But then I guess given that now with the mobile ecosystem, okay. So I've been in the industry for 16 years, and so I understand how it feels to be small. I'm literally a very small person. So basically, I've been, 4 sides of the table, right? Like from fundraising to investing to exiting and buying. So I was part of the M&A group of a big Japanese company. So I know how it feels, and but basically want to just go through a little bit of details, like how sort of VC works, and then give you a little bit ideas of how we think that small companies can be much more successful and be big in the future. Especially, I would say small companies are very important in the ecosystem. Right? A lot of guys, like even Kabam and all the successful ones now, they used to be very small as well. So, but just looking at the venture capital funding, I think a lot of ideas out there, like how you actually look at like fundraising, right? So let me just start with like what's not, right? So especially from the perspective of venture capitalists, the funding is not, especially for gaming, it's not a project financing. So we don't look at like one specific IPs. We don't look at like, helping you to finish your prototype and all that, right? So it's really like a collaborative process. You guys start with your idea, go through the process of developing the prototype and all that, and then we'll come in to help you grow. And then it's not about, we financing your mortgage or paying your student loan. Don't come to us like after you finish school, I need a job, but I couldn't find it, so I want to start a company, can you fund me, right? And then it's not for a kind of a lifestyle business, right? If you are like thinking about work for hire studios, this is more like a stable business. I don't think you need like venture capital money, right? It's really something you want to additional money to help you cross the chasm, right? To like go from 0 to 1, and then 1 from 100, and then 100 to 1,000. And obviously the VC money is not free, right? So and it's not about like you get the money, run away, you get rich, right? And some people raise like so yeah, it's not free, and it's not to get rich, but same for VC, right? Like we are. Obviously, our capital is coming from a food chain, right? Like coming from other investors, what we call LP. So, and our idea is, I mean, at least from our perspective, right, is really to empower entrepreneurs. And it's not like trying to be like the shark taking over your company, getting over like, 50% plus and more. That's not our philosophy at least. But then, what is it all about is really, again, like to be drive growth, generate strategic value. If you look at the recent article from the recent funding of Frank Glory. So basically, the comment is that it's not really about financing, right? It's really about finding the right strategic partner for you to grow to different markets, especially in Asia. And it's a huge responsibility, right? You take our money, and we hope that you're gonna have a strong ambition vision. So essentially, VC likes something very much innovative and creative, but then at the same time, we want to make sure you guys have a sustainable business. So sometimes we will look at basically more toward the innovative side, kind of looking toward the future rather than looking at the existing, right? Like you could make some money building another Candy Crush and whatnot, but that's not kind of what we're looking for. But then some VC are more kind of focusing in the middle, right, where they have generating reasonable business plus have a very good innovative ideas and technologies. We are a little bit more flexible. We can entertain something a little bit more toward the future. So just give an example, right? I actually come across a guys who are kind of a street performer, very creative, and then creating a one live band equipment. So you can go to the Pier 39, you can see him there. But it's not something it's very creative, but it's not something we think that will have for a really big business, from our perspective. And so what is the difference between gaming companies, or what I would call the content business, traditional business, versus technology startups, right? So for, at least in the mindset of a lot of traditional studio mindset, they look for something kind of immediate cash flow, the immediate revenue, and that will, if you look at the curve, right, a lot of studios are kind of around the stable, low growth or stable growth stage, and then maybe 1% will kind of hit the tipping points and become the hockey stick part. But in terms of if you look at technology startup, even the Facebook, the Twitter, and LinkedIn, a lot of them, the difference is they are actually, at least we believe that they can tap into the network effects much more. And then, at some point, they'll be able to actually get to the tipping points and then hit the hockey stick much faster and potentially longer. So it's the life cycle of your business that will determine how attractive your business to the venture capitalist. I'm not going to go through this into details because I think there are lots of sessions that are covering the market. But for us, we are a mobile first focused fund, and so we do look at gaming as a specialized vertical that we have. But then at the same time, we do look at the ecosystem and see how our portfolio will be beneficial for all of our companies, and then how we can actually able to capture value in the whole technology stack. Gaming is obviously very interesting. Mobile is very interesting. If you look at the market, it's definitely hitting the $230 billion in Asia. I'm not going to go through this in details, but one thing we do realize, 75% of the revenue is coming from the gaming category, so there's definitely something there, but then it's very fragmented still. They're as I previously mentioned, there are 1 or 2% winner, and then the rest is kind of at the very stable or maybe not making it either. So, but we like to get in early, especially in the gaming space, because it's definitely a probability test, right? So if we get in early, that way we can at least hopefully get a higher, capture the higher multiples. So in terms of the market, I'm not going to go through this in detail, but when we look at the market, I think there's definitely a lot of opportunities in the emerging market, especially in Asia. And then it's not about like, you know, for the domestic player. I think you have been to a lot of sessions whereby there's a lot of cross-border opportunities. So to us, it's like, you know, if you are a sort of aspiring entrepreneur, want to have a very like ambitious goal, I think that, you know, down the road in the future, if you look at like, even just from a financial perspective, a lot of exit actually from the Asian acquirers, but it's acquiring the overseas Western content developers. So the growth is more stable rather than in the Western market. So we see there's huge opportunities in the demand of high quality mobile content and technologies. So for us, just for a quick one, I'm not going to promote ourselves too much. We are a global team. So I mentioned that we are pretty well distributed. And one thing is we like to actually go into the underserved market, especially the Eastern Europe and also the Nordic region, just because there's not as much capital as the Valley, plus there are a lot of good talents there. So we're not that, we are more adventurous in that sense. We do actually have a more comprehensive approach. We do think that capital is one component to empower entrepreneurs and the startup studios, but then I think that given that we have a pretty good network and then the know-how on the domains, expertise, plus also how to scale up a business, it's very important like we be active investors or some sort of like smart money rather than like a passive investors. So this is a little bit of a track record. I've been in the industry for 16 years. So throughout the journey, I have to cover like early stage, mid stage, and late stage. So these are just a summary of some of the things we participated. And we, like I said, we are pretty hands-on sometimes. Especially depending on the stage of the company, so we can tap into those networks that we have. For example, the CEO of Unity Japan is one of the mentors. He's very active in helping sometimes giving advice to some of our portfolio companies. And then just to highlight, we have part of the reason we can get into sort of more with a higher confidence level in the gaming industry is because that we have Inufuleza. He's the designer of Street Fighter and a number of other titles from Japan. He's one of our board of advisors. And so now he has his own title as well. It's called Mighty Number 9. And as an experiment, he put it on Kickstarter. He raised about 4 million plus for his title. So he's not just domestic, he's also very global himself. Like I said, we like to tap into the cross-border opportunities for startups. Like regardless where you are, we try to like bring it across the continents. We're pretty active in the ecosystem, trying to be like, be part of the crowd and be friendly, but then we also have a very rigorous process at the same time. I think just quickly go over how we think small companies like you guys, or maybe not you guys, but some of those out there, can be bigger. So essentially, when you look at like fundraising, look for someone who can be truly, especially when you guys are very early stage, look for someone who is truly a partner. You know, people call it smart money, however it is, it really doesn't matter, right? When you're early, you have an amazing team, good product, good vision, and the must is like execution, right? It's not about dream, it's more about execution. Then you find an investor who has the operational experience, who know the business, like what you are doing, and then have a really comprehensive network, not just like the industry, plus also like the following, like bigger, like later stage investors that can help you along the way, and then maybe potentially a corporate that can seed the path for your potential exit, however you guys aspire to. But then when you guys are later stage, you can find, firms who are more focusing on numbers, right? Like the financial guys, right? Like, what is your revenue? What is your top line? What is your metrics, right? There's different criteria, and those guys are a lot more hands off. And as long as you present them on a quarterly or every half a year, good numbers to them, they will be happy, right? And then, but at first you kind of need to build out your foundation. So you partner with like those guys who understand, and then afterward you work with some folks who just can write a check, right? So again, like we just try to be like part of the your team in a sense. We are not like accelerator. We're not really incubator because we don't have a fixed program per se. It's really like depending what you're working on, right? And then depending on which geographic you're focusing on, and then what is your future plan, and then we lay our plan together, and then at the beginning we sort of work as your strategic partner, business partner, and that way we're much closer to you guys, and then we provide the funding at the time when you truly need it, such that you don't want to raise too early, and then you don't want to raise too late, right? It's like always raise the money when you think that will add strategic value, not just like another paycheck or something. So we sort of think that especially in the early stage, we can have a diversified portfolio, and then we round up the team of this portfolio of companies with our resources, thanks, and then with our distribution channels. We're not publisher per se, but we do have a very good relationship in different parts of the world that can help to strengthen that process. When we go into like helping some of these discussions, we definitely can get a better terms than you as an individual. So we try to go through a lot of different like process, and then again we try to be the one bridging the gap in terms of like finding partners, finding funding, and then also going overseas. Yeah, I guess we are more financial across the board, obviously, because we do have responsibilities, right? Like you take money from us, we take money from our investor. So every day, well, not every day, but at least like I can promise our investor that even though we don't make multiple like 10 times or whatever, but we still manage to return money to them. So we would expect something the same along the line. But then when we operate, we do actually try to compare with how agile we are, how flexible we are, and then how closely we can work with the entrepreneurs. And so we try to map out, maybe we can be more helpful than some of the strategic because we are much more natural. And then we can be more flexible in the capital because we don't have like that much string attached. It's just like a final thoughts. I think a lot of people were, in a sense, struggling why it's hard to raise money from individuals or from VC who don't have a diversified portfolio. And it's very simple because if you don't have a very diversified portfolio, the potential of return for them is quite difficult. And especially in the gaming business, the cycle is very short. So I'm not going to go to detail, but just let's say you get some money from angels for about $200,000 or something, and they normally put in like 1 to 2, or they invest in 1 to 2 startups. And for them to actually get money back is like very slim chance. And then, so yeah, like, even like the average market potential exit, which is sort of mid-market exit, like $100 and $150 million exit, it's still, if you look at just the math, it's actually supposed to be like a loss. So like sometimes like you have to I would say think from the perspective of your investor. Like it's not easy, right, to be in the business, right? It's not easy for you guys, not easy for us. So just try to be like very collaborative. Like if you are actually stealing money from outside, try to think of a win-win scenario whereby you can build a successful business, and then they also will have the same return. I don't know. I think it's running out of time, so I'm not sure. So I still have 5 minutes. So if you have any questions, happy to answer, or I'll be here during the event. Thanks.
What do you think is a typical comfort level?
So for early stage, we try to like fund. We can actually follow on, but then I think the size is like roughly below 500,000. That's a good size, right? And then once you guys sort of ramp up to the stage whereby you need another round of funding, and then we hope that by that time your valuation will jump up because of the foundation you guys built at the metrics and everything, then you go for another 1 to 2 million round, and we'll participate, and we'll bring in more value-add investors to the table. That way your valuation go higher as well. And yeah, so that's why I think fundraising is not just about it's like Slack. I don't know if you guys know this company, right? So they raise more than they need, but then because they just want to be like hitting the valuation that they can at this market, so they're $1 billion. So that way they have more bandwidth to hire people, not because of financial, but because they give like the confidence level to attract the right engineers and such, right? So, but to answer the question, like I think the early stage, especially the gaming, is pretty cost efficient. We think that 500 and below is sufficient. Yep.
Your entire fund isn't just mobile, correct?
Yeah, we focus in mobile mainly. Let's say you're doing PC games and all that, then we're not that.
Or say esports.
Yeah, if it's mobile. So.
Okay.
Regarding your fund, though, there's when you talk about $500,000 fund, for example, you said there's 2 stages, right? So there's the production stage, which is not really what you want to be funding, where there's just an idea and you have to produce. But there's the growth phase where a company is looking to pivot and then break a certain barrier. And a lot of that funding then for a company goes towards user acquisition and marketing,
Yep.
other than just production. Is that the sweet spot where you guys fit in, where you're looking where the product is made?
No,
and then
we get in when there's already a prototype and a beta, and then we can get in and then help you guys kind of scale up at that point. And then after that, we usually follow on in the companies that we funded at the beginning. And but actually we do a late stage as well, but that's kind of separate fund that we do. But yeah, so we can cover a pretty wide range. So.
Do you invest the company or do you invest?
Yeah, we invest basically company, the team, and equity basis. Yep. All right, thanks guys.